everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for our futures markets, specifically our big six markets, and that's going to be the bund, gold, bonds, crude oil, NASDAQ, and the S&P for trading on 3/8 of 17 for tomorrow's trading. The main purpose of these videos is to create a game plan and attack method for tomorrow so we can be as prepared as possible. Now, before we jump on into the charts and all the fun stuff, make sure to swing on over to Slingshot Futures, scroll down, and click on the Join the Daily Outlook newsletter, and that will log you in and sign you up for our email newsletter list. And along with that, you'll know when we're launching videos, any new information that's coming out, new statistics, different stocks that we're keeping an eye on, all kinds of fun stuff that will add you to that newsletter list. Along with that, we also have every single day at the bottom our blog post for that day, and we have psychology videos along with the morning prep levels for our levels traders. So make sure to check those out every single morning. Now, looking at the overall movement today, there wasn't any news once again, right? So we weren't really anticipating a whole lot out of today. Unfortunately, that seems to be kind of the common story, but, well, you know, tomorrow we at least have a little bit of stuff going on. Tomorrow's news, we have the ADP non-farm employment change at 8:15 in the morning. Sometimes it moves the market, sometimes it doesn't. It depends on if there is other news in that day, and there really isn't in terms of big news. Now, for crude oil, obviously, inventories are tomorrow, which can move the markets pretty nicely. But outside of that, that's really about all we have for tomorrow. So tomorrow, we may have a lot of the same once again with potentially some lackluster movement. But looking at the bund, we had a nice rally higher in the overnight session, good movement to the upside, and then we started pushing into a range and not really getting anywhere pretty quick. Now, the overall wedge that we're putting in does have a bull bias. We rallied into that very aggressively to the upside. So given that buyers are going to love to be buying pullbacks as deep as they can get them, 161.17 would be the first big area of interest if they can get it down there. But there may be some sub-levels in here as well where we found a little bit of a balance before around that 21 up to 27 or so, which is sort of where we are at the moment. Now, in all honesty, what I would really like to see is an attempted breakout to the upside that fails, an attempted breakout to the downside that would trigger in a lot of sellers after seeing the bull move fail, get them into that major support, and then rocket ship it right back up towards the highs, or at least back up to that 161.35, maybe even up to 45, maybe up to a new high at 55. And you'll notice something common. They're all about 10 ticks away. So very interesting that each one of those is separated by about 10 ticks, and we may find that those are the levels that we run into on the way up that causes a little bit of a grind. That's kind of what I'm looking for, though. If we can get a trap higher that fails into a trap low to trigger in a bunch of sellers to fake them out and then shove their stops right down their throat for a move back up towards the highs. So still looking to buy, but I wouldn't mind a few traps to get that move going. Over on gold, very nice bearish momentum overall. Most of the European session was range bound with a slight bear bias. You can see them kind of rounding down. But on, as soon as we started kicking into the US session, 7, 8 o'clock, then we really started catching the hammer to the downside. Big bearish movement. But they found a base pretty aggressively at around that 9:30 mark where we had a really hard time. Now, we were talking about this in the room where, this type of movement, you're likely going to get a correction back up for sellers to sell low. They're not going to want to hang out around this area and sell at the bottom anymore because obviously the sellers don't want to sit there. So because of that scenario, looking to sell at a better price makes a really good reason for the sell move back down to the lows, and that's exactly what happened. A big bull breakout into a strong turn right back down, and that allowed the sellers to slam the market down into that support again at 12.17. Small little bounce into another strong move down to finish off the morning. And now after that, we have a bunch of the sellers who've been short all morning are taking profit, and that's forming a little bit of a wedge. Now, this wedge, along with the fact that we have major support and resistance at 12.17, that gives us some areas of interest that we would like to keep our eyes on, right? The overall momentum, obviously, again, the sellers don't really want to be selling in this far down. If they were interested, they would have had a much more sustained breakout instead of just getting, 3 or 4 candles to the downside, go sideways, and then take it all back. You would see something like this where they break down and they don't stop. They break down and they don't stop. We're not getting that. So obviously sellers are not interested in selling low, and that leaves us to believe that we're going to have to sell at better prices. Right now, better prices those are coming in at around 16.3, as well as a little higher at 17. And if they really want to shove the market up, looking for resistance around that peak top that they put in earlier would be beautiful, around 1220.3 up to 0.8, and that would be a phenomenal place to look to re-enter the short side for a potential drive back down again. So looking to sell, but preferably at some better prices. And then there's the bonds. Oh, the bonds, good old bonds. Very slow market lately. Pretty obvious given this back and forth. The chart even looks kind of weird, just the way that this looks. Now, if we bump this back to like a 15-minute chart, it makes things a little bit clearer, but you can still see it's not giving you a whole lot to work with. We have a range, and that is about it. We're looking at failures on both sides, and now we're sort of deviating this range out. Now, what I mean by that is we have the original range. They fake break the lows, they fake break the highs, and then we finally get a sustained move, and that tends to be about equidistant to that original range, and that's where we find a bunch of support. So the fact that all of the support is coming in there, if we do continue to break out, I would expect these breakouts to be in tiered formation, with the next area being around that 148.16 mark for the next level of support. We are forming a little bit of a wedge here, and if we zoom into the 5-minute chart, we can see that they've been challenging the lows for the last 20 minutes or so, arguably even a little bit longer. But all inside this area has been a little bit of a mess, with the sellers trying to break this down. What I would really like to see here is that breakdown to occur, but not get very far, right? Push into where that deviation would be around that 18 level, get the breakout into that support, and then look to bounce it right back up again. Overall, we're dealing with a bunch of ranges. Buy low, sell high, stay out of the middle, and you should do just fine. Over on crude oil's API report just coming out now. Nice bearish response to that. In terms of the overall movement that we're getting, again, the big thing to really consider is where did we actually go? Did we get good movement, or was it a little bit kind of iffy? Overall, we got really good movement, but they really didn't get very far, right? We ran into the situation where we had a nice stagnating morning for a range, big bullish breakout, good continuation, and then it gave all of it back. So with that kind of give back at the end of the day, and the API report obviously doesn't help, that's telling us one really big thing, simply that, well, I mean, yeah, we had the big move, but really it just ended up being a range. We opened up, if you look at the ETH session, we opened up here, and we're going to be closing somewhere down here now. So on a daily chart, that's going to be a very bearish candle. Now with this API report helping that downward move, and a huge rejection off of the highs, which on a daily chart would just show up as a big old wick. So on the daily chart, we have a very bearish sentiment going into tomorrow with a complete failure. And that may mean that the market is going to want to fall down to that next big support at 52.54, and maybe even a little bit lower down to that big 52 mark, back around those round numbers, and then monthly support at 51.86. Now, the overall downward pressure that we're getting, likely this API report is going to be seen as a little bit exhausted. It's too much in one spot, all happening at the same time. And a lot of times what will occur then is the market will pull back on itself. Sellers will then dive in again, and that will potentially allow that sell to take place. We do have support now turning resistance with this breakdown between 53.02 and 06 all the way up to 09, and that area could be a large area of interest depending on how aggressive this candle closes. If it closes here, as an example, a nice pullback into that area, looking for selling pressure, and then boom, drop it right back down to those lows. The overall spike in channel that we have forming here is seeing a bearish breakout on this news, and that will be seen as slightly exhaustive. Again, just too much too fast. So looking for a correction is necessary, and I would love to see that correction into that 53.02 up to the 09 area for continued selling pressure. Over on the NASDAQ, mostly a range here as well, not really getting a whole lot of movement one side or the other, but this range is forming some interesting levels of support and resistance that we can work with. The lows being between 53.45.75 down to 53.44 even. We also have a minor little support area with that little tap test, and a little bracket of support. And that's going to be at 53.49 even. The high edge of that double top that we had earlier as well, 53.60.25. And then if they really want to cycle this all the way back up, we also have 71.25 up to 74.25. And again, this is a range. We know what to do in ranges: buy low, sell high, stay out of the middle, and you should do just fine. At this point, we're at the lows, and although we are at the lows, this was a very strong move down. So I would anticipate the sellers maybe giving it one more shot to the downside, find support in here for that bounce back up towards the highs, and then look for resistance and drive the market back the other way. And on the S&P, very similar situation here on the S&P, but a little bit more of a wedge forming. Nice little bear wedge overall. And the reason I would say bear wedge is because we had a down move into it. But overall, we're in a range, especially in the morning session. Very aggressive range. The highs of which around 73 3/4, the lows 71 1/4, finding a lot of support and resistance around there for the market to sort of play around with. And now we are at the lows in a very similar situation to what we saw in the NASDAQ. Very aggressive bear move down. Likely the sellers are going to give it one more shot. They're probably going to find support anywhere between 65.5 down to the lows again at 64.5. But either way, looking for a buying bounce out of that location for a drive back up. Maybe finding resistance at 67.25 if we can get that cycle off the lows. If they don't, then you're looking for the next move up to 71.25. So again, we have a range bound sentiment, looking to buy low and looking to sell high. That's going to do it for the outlook. And overall, looking at the general scope of things, we've been stuck in a range for a good amount of time. There are a few markets every once in a while that will get some nice breakout movement, so be on your guard, play it safe, and prepare for it. But if it doesn't, you also have to have a plan for when the market is purely range bound. So again, if you have any questions about any of this, feel free to send me an email, jbrink@slingshotfutures.com. That's going to do it for this one. Talk about good calls on the stocks last night. Very nice rises. Both of the stocks we talked about had about a 10 to 11% increase in price. So very good in terms of those bounces. And we're looking for another one tomorrow. Could be a little bit interesting, but again, with this slowdown, we're starting to see them kind of wane out a little bit. Not as many of them, but if you're not subscribed to the newsletter, you probably missed those. Make sure to sign up for that so you don't miss those again. And that's going to do it. So like we always say, make a plan, trade the plan, follow those rules, and you will be A-OK. Until tomorrow, have a good one.